Hey everyone, and welcome to our usual chat about the strategies in our portfolio that have performed the best over the past period. As always, before we begin, please, I invite you to leave us a like, go and subscribe to our channel, and go and click on that little notification bell to stay updated on all our new content. Thank you so much. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so this week I want to talk to you about the gold market. Now, these futures are one of the most important and certainly one of the most well-known. And today I want to introduce to you 2 mean reverting strategies that try to enter, as they say, against the trend, that is, against the basic movement of the market. Now, the main difference between these 2 strategies, which have a very, very similar trigger, by the way, is determined by the time frame. So let's go and take a look at the very first strategy. It was developed on a 5-minute chart, and as in the following strategy that we're going to be seeing today, the positions are opened when a false breakout at the levels of the previous day's high and low occur. As in this case, you can see that the previous day's high was at this level here. And the market first broke through this level upward and then closed below the previous day's high. And that set the stage for a short entry. Vice versa for the long trades. Here is a long trade. We can see that the previous day, the market made a low at this level. Then here, the market went below this level. And then it closed back above it in a subsequent bar. And here we have the conditions to open a long position. This strategy was developed in 2017, and over time it has continued to work pretty well. So from more or less this point here in this period, and you can see that in the following months, or rather in the following years in this case, because 5 years have passed since the date of the creation of this strategy, you can see that this strategy has done pretty well. Now, this mean reverting logic isn't the predominant feature in the gold market. However, above all, in recent years, we've seen mean reverting strategies respond very well to price movements in this market. So also for this underlying, we can see that prices tend to move back towards the average. And this, of course, has led to gains in the strategy. So this is an intraday strategy, which means that all positions are closed by the end of the session at the latest. Okay, let's move on to the next strategy that we want to show you today. It's pretty much based on the same concept, but in this case, the false breakout is calculated on a secondary data series that we see in the chart below, namely the 15-minute. So we'll enter the market when a false breakout occurs in the 15-minute time frame. The concept is the same as the previous strategy, but in this case, since we wait for 15-minute bars to close instead of 5-minute bar closes, fewer signals are obviously generated, and so we have fewer entries. In this case, that wouldn't have been a good thing. On the contrary, working on 5-minute bars instead of 15, especially in the years between 2019 and 2021, would have led the strategy to earn more. And we saw this in the previous strategy. But again, in the last period, in the previous year and a half, the strategy has resumed performing well in the way that we were all used to seeing, and has also reached its equity peaks. So, this is further proof that even on more extended time frames, the strategy has performed quite well. It's true that it performs worse than the previous one. However, right now, it is at its equity peaks, and that is certainly very good. Because, it kind of confirms the assumption that thanks to the surge in liquidity that has occurred in the gold market recently, because this future has actually become really very liquid, thanks to the surge in liquidity, to this change in the market, mean reverting approaches are likely to come back into play, which is good news. So guys, go and give it a try too. And these strategies are really easy to code. And if you're interested in the world of systematic trading, please go and click on the link in the description. From there, you can access a free presentation by Andrea Unger. You can go and get our best-selling book by simply paying the shipping costs or even booking a free call with a member of our team. And also, please leave us a like if you enjoyed the video, subscribe to our channel, and go and click on the notification bell to stay updated on the release of all our new content. And with that, we will see you again soon in our next video. Thanks for watching. Bye-bye.